In the past few hours, both the traditional and crypto markets have experienced severe drops, and in this video, we'll focus on understanding whether this is a market trap or if we're facing a shift toward a bearish dynamic. Let's start by talking about the S&P 500 on its 4-hour time frame. If you recall from previous videos, we highlighted how unusual it was to see the S&P 500 trading above a key defense zone. At the same time, we observed that the Nasdaq was in an equivalent defense zone, but with one major difference: it had not been surpassed to the upside. We mentioned in previous videos that this discrepancy could potentially signal a warning. Of course, we didn't have certainty at the time, but there was a possibility that the Nasdaq was signaling that the apparent upward breakout of the S&P 500, which seemed to promise further gains, could ultimately turn out to be a trap before heading downward. Through cross-asset analysis, we can interpret the intentions behind smart money movements. If we see the Nasdaq struggling to break a structure, while the S&P 500 is already doing so, the Nasdaq might be warning us, be careful, the S&P 500 breakout may not be genuine and could turn bearish. This scenario is within the realm of possibility and could indeed be a trap. Meanwhile, the crypto market, particularly Bitcoin, was already hinting at imminent volatility. It wasn't just Bitcoin sending this signal, Ethereum was doing so as well. To be honest, we couldn't predict the exact direction of the outcome, whether up or down, but what was clear was that significant volatility was on the horizon. Now, in hindsight, we can see that the Nasdaq was the one truly sending that red alert. Of course, at the time, there were no guarantees. It was merely a well-founded hypothesis, one that, as it turns out, aligned with the decisions of the strong hands in the market. Honestly, considering the context, these events shouldn't surprise us too much. Some people are linking this drop in the traditional market to the emergence of a Chinese AI application that's directly competing with OpenAI. This application is not only significantly cheaper, but also open source and even more powerful in several tests. This development might have sparked some fear in the American market. But one thing is clear: an event as premature as this can't single-handedly bring the market down. There must be more happening behind the scenes. Therefore, we should view this as an event driven by pure fear and analyze whether institutions are absorbing the panic or not. Interestingly, something similar has occurred in the crypto market. Over the weekend, a series of news stories about Donald Trump started surfacing, some of which I shared with the open Telegram community. As you can see, this weekend has been a celebration of good news for the crypto market. Any investor naturally might assume that with such positive developments, the market would have no choice but to explode upward. But now, you can see the decision smart money has made, even with this information in hand. If smart money knows these headlines are public knowledge and understands that even a 5-year-old could predict the average retail investor's reaction, interpreting this news as highly bullish, then institutions know that retail investors are likely to buy. As a result, these institutions absorb all that liquidity and move the price in the opposite direction, catching everyone off guard. This weekend and today, Monday, have provided us with a valuable lesson from the financial markets. Now, let me share what we believe smart money might be planning at this very moment. But first, I want to introduce you to our private Telegram channel, which is completely free. In this channel, we host live sessions daily. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI, have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us, we're waiting for you.
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's start with Bitcoin. To assess whether institutions have taken advantage of the FOMO in crypto to drive the market down, and to validate the hypothesis of this being a trap and liquidity absorption, the next step for Bitcoin is clear. We need to see a swift recovery of this specific defense zone. The fact that it has already shown such an immediate reaction is, in itself, a good sign. It's just the first step, not a full recovery, but an important first move. Now, let's look at Ethereum. Notice how the asset's extreme volatility has landed right in a macro defense zone that we had been discussing for some time. This alignment reinforces the idea that even amid chaos, the market often respects key structural levels. As I was saying, seeing such an immediate reaction from Bitcoin with such perfect timing is a hopeful sign. Remember, as we explained in previous videos, to start turning negative on the crypto ecosystem, particularly with Ethereum, you would need to see the loss of certain key structures. At the time of this recording, those structures have not been lost. This means the scenario of volatility for absorption could still be on the table. What's happening with Solana is also very interesting. The extreme volatility we had been anticipating without knowing whether it would move down or up, of course, has now arrived and immediately pierced through its defense zone. However, we're now seeing a fight to recover that zone, just as we've observed with Bitcoin, Ethereum, and now Solana. Though from different perspectives and structures, they're showing us a very similar path. They seem to be signaling we've come to threaten you aggressively, even breaking through key structures, to instill fear in the market. And yet, for now, they're reacting right where they need to. Why? To potentially, in a positive market scenario, interpret this bearish excursion as a market trap. Is the market trap guaranteed? Absolutely not. Nothing is certain here, but we're working with hypotheses to better understand the short-term ambitions of smart money. As for BNB, we've discussed in previous videos how complicated this asset has been. Since March 2024, it has been oscillating up and down erratically. Recently, we've seen some volatility, but we'd even go as far as to say it's less intense than it was until recently, which is a bit unusual. That's why we've established a key threshold for this asset. As long as the macro bullish channel structure, which I'm highlighting now, remains intact, we can continue to maintain a positive outlook. Therefore, we can maintain a long-term positive outlook and even suggest that BNB, when analyzing its volume profile, shows that if it really wants to, it could have room for further downside. It could be supported by the key nodes we've discussed in previous videos. This isn't a prediction, but rather an explanation that within BNB pseudo-random volatility, it can remain volatile. However, as long as it doesn't break specific structures, the sentiment can stay positive. Now, take a look at Cardano. At the price level of 0.8561, we find a critical structure. This key structure appears to have been confirmed following the recent extreme volatility. As you can see, the entire ecosystem has come to test sensitive areas, perhaps with the exception of BNB. And this is the moment when things need to be decided. We're at a lower extreme of the crypto market during a period of high volatility, with the possibility of a bearish trap. That said, the bearish trap is not confirmed. We need to see specific reactions in certain assets. As I showed earlier, this is especially evident with Bitcoin. If you want to confirm this trap, Bitcoin's price needs to recover, perform a retest, and then start moving upward. Until that happens, the trap remains unconfirmed. We are simply considering the hypothesis. If it doesn't materialize, it would suggest the crypto ecosystem may want to push us to the edge, threatening key structures. If those structures are lost, it would mark a shift away from the positive trend we've been experiencing for months in the crypto market. Now, with Polkadot, could we be witnessing climactic action stemming from an impulse, a channel, or a range, culminating in a deceptive final move? To confirm this, we need to see the price recover to the $6.21 level. If that happens, it would suggest we are at a market low. Is this guaranteed? No, but we know what to look for on the chart to confirm this hypothesis. If you enjoyed this video, let me know in the comments. Don't forget to like the video, subscribe to the channel, and click the bell so YouTube can notify you of future uploads. Good luck with your trading, and see you next time.